Hey, Kyle.
Hey Dan, how you doing?
It's quite the video going on right now. Is your light off?
Yeah, I was getting a lot of glare off the screens here.
Gotcha. Okay. Well, why don't we turn off our video and let Tim get signed on, and we'll get started here in a couple minutes.
Sweet.
I'm here. Can you guys hear me?
Yep, I can hear you.
Great.
How's it going?
Good. Long time no see.
Yeah, right. Well, I see names starting to float in, but why don't we give it a couple minutes, Tim? And I'm going to mute my. I'll wait for you to come back.
I can hear you.
Mute our lines and turn off our videos and give people a few minutes to get signed in.
Okay, sounds good.
Cool. Thanks.
Hi, Kelly. Can you hear me? Okay, great. We just had it muted. Okay, so it's a couple minutes after, so I think some folks are probably still signing in, but we'll go ahead and get started. Good afternoon, everyone. My name is Tim Corrigan. I'm a business banker with Umpqua Bank in Seattle. Many of you know me, but a lot probably don't. So similar to Dan and Kyle that are going to be joining us and presenting today, I've been getting a lot of questions about the PPP loan program, especially the loan forgiveness component. By last count, I think there were 19 interim final rules issued by the SBA. So whatever the heck that means, it sounds like an oxymoron to me. But anyway, why not just call them interim rules until the end? Excited to hear from Dan Nicholson, who's the CEO at Nth Degree CPAs in Seattle. Dan was also named a CPA practice 40 under 40. Although Dan, I think you're pushing that 40 number now, if I'm not mistaken, pretty soon here. But
yeah, I got one more year, I guess I can apply, but
the 40 under 40 closing. That lives in perpetuity, right. that award. So, and then we're also going to hear from Kyle Bogie from Nth Degree CPAs, who is the tax director there. And so we're going to hear from them on some of the changes and just some of the key components of the forgiveness. And then we are dedicating a good chunk of time for Q&A. So just as we go, feel free to go ahead and post your questions in the Q&A box there. So that would be better than the chat for that purpose. And just try to give Dan and Kyle some context around your question as best you can. And we'll go through those towards the latter part of the webinar here. So with that, I will go ahead and turn it over to Dan and Kyle.
First off, thanks so much, Tim. Our pleasure to be partnering with Umpqua Bank to give this important update on PPP loan forgiveness. As you alluded to, Tim, it's been a pretty incredible moving target over the last several weeks, months, in terms of what the guidance would look like. And I know that's been a source of frustration for a lot of our clients who've been trying to kind of weather the storm and make the most appropriate business decisions in light of just the state of things. So we've tried to stay on top of this throughout and give the best updates, but oftentimes those updates kind of quickly become stale, unfortunately. So here we are today, where Congress did take an action a few weeks back and amend the rules. And so our intention today is to, and I'm going to hand it over to Kyle here in a moment, who's going to lead the charge. The intention from today is to walk you through what we understand the rules to be today, or as of today. There were some updated proposed interim final rules that were made available yesterday. They're supposed to be officially published later today, but so we're giving you the most current guidance that we have, but it's not necessarily going to be every answer to your questions because those aren't currently available. But we're going to give you what we know today. And as Tim mentioned before I hand it over to Kyle again, use the Q&A, not the chat. And when you post in the Q&A section, just give some context behind that question where applicable. And we'll answer those questions once we get through the presentation portion. So we're going to present the content and then we'll turn it over and answer as many questions as we can. With that, Kyle, I think you're there. Can you hear me?
Yep. I can hear you okay.
Okay. Well, I'm going to turn it over to you and I'll jump in kind of as we go and add some color along the way.
Perfect. Thanks, Dan. So yeah, thanks everyone for joining today. I'm going to just jump right into it here with the most recent series of updates. And then after we go through these updates, we'll just kind of walk through kind of the details of the PPP forgiveness as we know it today, and then leave plenty of time for questions there at the end. So some of the most recent updates, there was a change to the loan term. So any new post 6/5 loans will now have a 5-year loan term. Loans that were set up prior to June 5th, borrowers can work with their lender, and if approval is granted, can also get a 5-year loan term. So big change. The second change was around the 8-week period that was referenced in most of the initial guidance. That 8 weeks has been extended to 24 weeks. However, loans that were set up prior to June 5th can opt for that initial 8-week period if they wish. Initially, 75% of the funds from the PPP loan needed to be used for payroll purposes. That percentage has dropped to 60%. Additionally, early on, it looked like with that change to 60%, there was going to be a requirement that you use at least 60% of your funds for payroll purposes, or you'd qualify for no forgiveness. That piece did not go into effect. So Even if you spend less than 60% on payroll, you can still qualify for some forgiveness. The date by which companies are required to restore their FTE, their full-time employee count, previously was June 30th. That's been moved out to 12/31. Same thing for salary restoration. So prior to these changes, employees needed to be returned to their kind of pre-COVID salary by June 30th. That date's been moved out to 12/31 as well. There's additional headcount exceptions for strictly COVID-19 related restrictions on businesses reopening or returning to full service. This is specific to companies that are existing in sort of a lockdown state. So there's additional exemptions there that people will qualify for. And then there was a change to the calculation for owner compensation. Initially, owners were restricted to 8/52 of their 2019 net profit or 2019 compensation. That's been changed, and now you can use either the 8/52 rule, or if you're using a 24-week covered period, you can use the calculation of 2.5 months of 2.5 out of 12 times your 2019 amounts. So that allows you to get a nice jump in the maximum forgiveness amount from $15,385 to $20,833. Some of the most important things that we want to talk about. Number one, delay applying for forgiveness as long as possible. As the SBA continues to roll out updates and additional clarification on things, it has proven to be beneficial to wait. And so we recommend that businesses wait as long as possible. Your repayment of your loan is scheduled to start 10 months from the end of the covered period. So depending on how long you wait to apply for forgiveness, you may have to start making payments against these loans. But 10 months is still a ways out. So we would suggest, at least for now, until we have final guidance from the SBA, don't apply for forgiveness yet. If for some reason your forgiveness application is denied, there is an appeals process that will be available. We're still awaiting final details on what that process is going to look like. We strongly suggest that people track their spending in a separate spreadsheet outside of their standard accounting system. This is just for documentation purposes. The SBA may really drill down on reviewing documentation to support spending here. So the more that you have, the better. This is less of an issue now that the period has been extended to 24 weeks. But we say spend as much as you can on the areas that are definitely qualified purposes. And then if you get to the end of the period and you have excess funds, that's when you should start to try to loop in some of these things that are still kind of in the gray area to make sure that you maximize your forgiveness. And the last piece here, if any spending is done on non-qualified purposes, so we'll go into what qualified purposes are specifically here shortly, but if you do spend in any other areas, the SBA will expect you to repay those funds immediately. All right, jumping into the lender review a bit here. So upon applying for forgiveness, which won't happen until after your covered period is closed, the lender will have the first shot to review your application. You as the borrower will compute your forgiveness. This is all done on the loan application, the forgiveness application. Updated copies of the forgiveness application have recently come out, as well as a streamlined version for simpler businesses. We're still waiting final guidance on both of those. application forms, but they are available and can be reviewed through the SBA website. The lender will review the application, including any certifications that were made by the borrower, all the documentation and computations that go along with that. That process can take up to 60 days, and if the lender needs to request additional documentation or support, they get an additional 60 days for those follow-up requests. So in short, that review period can stretch on for several months. After that initial lender review, the SBA also has an option to review those loans. This is for loans of any type. Loans that were in excess of $2 million, there will be an automatic SBA review. Those under that amount, there's no automatic review, but could be a review. The SBA gets 90 days to review, plus an additional 60 days for each follow-up request. During that period, it's likely that your loan may come due, and so you may have to start making payments against it before your forgiveness has been approved. And the SBA can jump in and direct a lender to refuse forgiveness at any point in that period. The statute of limitations on the SBA review is 6 years. So what that means is you should retain all PPP related documentation and support for at least 6 years. So that if any time between now and then the SBA comes in and starts asking questions, you can hand over your support. The SBA has the option to review your eligibility for the PPP in the first place, the amount of the loan, so the calculation that went into determining your loan amount, your spending, and your forgiveness. Some concerns that we have that we're going to touch on here. Your spending. You want to make sure that you're spending on only allowed and then as much as possible on forgivable amounts. Areas that will reduce your forgiveness are a drop in pay, a drop in headcount, disproportionate spending, and failure to be able to prove the spending there. So we're looking at kind of 3 periods with regards to the use of funds. Your first period is kind of the lending period. That's how the amount of funds that you received were calculated. This is based off 2.5 months of payroll. Then your use, previously 8 weeks, now stretched out to 24 weeks. So within that 24 weeks, you were able to spend your PPP funds on salaries, certain employee benefits, certain interest, rent, utilities, and then kind of other broadened areas in those categories. And then as far as forgiveness goes, forgiveness applies to salaries and benefits, interest, rent, and utilities. This chart, which will be available, is kind of walks through how different areas you can use PPP funds, and then of those, which qualify for forgiveness. So here we've got employees that are physically located in the US. Payroll there is qualifying. If your employees are located outside of the US, their payroll does not qualify for forgiveness here. And you cannot use PPP funds to pay those salaries. There's also a cap on salaries at $100,000. So if an individual earns more than $100,000 in 2020, there will be a cap on the amount of forgiveness that that individual can qualify for. Just skimming through a couple of these other ones. Benefits are in addition to that $100,000 cap. So health insurance and employer retirement contributions can be tacked on to the amount that would be allowed for an individual under that covered period. One note, with the stretch out to 24 weeks For non-owner employees, you'll be able to push through a significant increase in allowed compensation. Previously, at 8 weeks, you were looking at 8 out of 52 at $100,000. That puts you at that $15,385 cap. Now we're looking at 24 out of 52 on 100,000. That's much higher at 46,154. This is intended to allow for a much greater forgiveness for companies that are still kind of struggling to get ramped up. As far as taxes go, employment taxes, you're going to qualify for forgiveness and for use on all taxes that are withheld from employees, as well as state and local taxes that are withheld from the employee and the employer. Taxes that you cannot use the PPP funds for are kind of your FUTA, your Medicare, and your OASDI taxes. So FICA taxes there, as well as workers' comp. So in terms of spending, during the covered period, the 24-week period, that period starts the day that you receive your PPP funds, or you can elect for an alternative period. This is less, seeming to be less of an issue now with the longer period, but you could elect to have that period start on your first payroll following the receipt of funds. If for some reason you were not able to qualify for forgiveness, the origination fees on your loan that would generally be covered by the SBA are not going to be covered there, and you'd be on the hook for those as well. And then if to the extreme you kind of violated any of the certifications that were made when you first applied for your loan, or in terms of the use of your funds, that would be constituted as fraud. Sort of an FYI to throw out there. A lot of attorneys are really concerned about that fraud risk there. So just making sure that you're kind of above board with everything that you report as far as PPP funds and use go. The burden of proof in terms of how you've spent your funds is on you. So that's where we go back to saying document everything, have a spreadsheet that tracks how you've used the funds, and be able to show support for those payments. If by chance your loan is determined to be fraudulent and that you use the funds for disqualified purposes, that loan will convert to recourse, meaning the lender could go after other assets to cover your loan in the event you're unable to pay it back. All right, talking a little bit about drop in pay, so salary or hourly wage reductions. Your reduction in wage will reduce forgiveness if wages are reduced by 25% during your covered period compared to the first 3 months of 2020. That 25% reduction piece is nice because it does give you a little bit of a carve out in the event that salaries were slightly reduced for any reason during your covered period. The calculation looks at kind of prorated salaries for each individual, compares those back to that earlier period, and then takes that 25% right off the top before calculating any potential reduction in forgiveness. There's also a safe harbor here, which basically says now, as long as your employees have been returned to their expected 2020 annual salary by the end of the year, meaning you've kind of caught up on any reduction in pay that they suffered during the COVID covered period, there won't be any reduction in forgiveness as a result of that. Drop in headcount, kind of your full-time employee equivalent reduction. This is the piece that kind of is the most complicated in terms of calculating for purposes of applying for forgiveness. It requires looking at kind of each individual employee's hours and then calculating your total count of full-time employees during the pre-loan period and then during your covered period. So for each employee, you basically enter an average number of hours paid per week, divide that by 40, and then round to the nearest tenth. There's a simplified method that you can use as well. This method assigns a 1 to any individuals that are working more than 40 hours and assigns a 0.5 to anyone that's working less than 40 hours. You'd calculate under both of these methods and then choose the one that's more optimal for your situation. Your forgiveness is reduced by the percentage of reduction in average FTE during the covered period compared to your choice of periods, either 2/15/19 to 6/30/19 or 1/1/20 to 2/29/20. So you can, again, optimize between two different periods there as you're trying to calculate your potential reduction in full-time employees. There are some exceptions here as well that help in the event that there were changes in employee headcount that were outside of your control. One of them is if you've made a good faith written offer to rehire a particular employee and that employee rejects your offer, there's an exception for the count there. Good faith just means it was written, it was during the covered period, they were offered the same salary that they had prior to being let go. You've documented their rejection, and then this is the final piece here. You need to notify your state unemployment office that individual rejected your job offer. So you sort of have to rat on them there, which is kind of a bummer, but it does get you that exception. If, again, you fired an employee for cause, they voluntarily resigned, or they have requested a reduction in hours, those are all going to be additional exceptions. Document those to qualify there. And then last one here, that FTE reduction, as long as you've restored levels by the end of the year to your 215 levels, you're going to qualify again for kind of that safe harbor carve out. Disproportionate spending. So we talked about this early on in the updates. The percentage here has been changed to 60%. So at least 60% of your forgiveness must be used for payroll costs. So if you divide your payroll costs during the covered period by 60%, that will tell you how much your overall PPP loan may qualify for forgiveness. You'll be able to use the other 40% for kind of other qualified purposes, non-payroll. Some other things to consider, if you're a Schedule C, a sole proprietor, you're capped by your 2019 net profit without provision for retirement or health insurance. This should not be an issue anymore given this change. It used to be that your calculation here for forgiveness would be 8/52 of your 2019 net profit. That put a lot of people in a tough spot because their loan funds were calculated on 2.5 months of 2019 net profit. So there's almost no way for them to actually get to the full forgiveness amount. With the updates now, it's the same calculation that you use to determine your funds. So you should qualify for 100% forgiveness if you're a Schedule C. Same thing goes for general partners in a partnership. So anyone receiving self-employment income from partnerships, the calculation has been adjusted there as well. Other things that you can spend your funds on include rent, interest, and utility payments that were incurred during the covered period but were paid after. So you may be able to pull back into your covered period certain expenses that you paid outside of the period. Same thing for any late rent, interest, and utilities that you paid during the covered period. So if you had invoices or bills that were hanging out prior to receiving your PPP funds, and then you paid them after you received those funds, you can push those through as well. So there may be some additional expenses that people can capture, which is nice. Failure to prove your use. So you kind of have to prove it or lose it. The SBA will direct the borrower to repay any unauthorized use of funds. Loans become recourse if they were used for unallowed purposes. And just, again, retain all documentation for at least 6 years. Quick note on bookkeeping. So this is, purely on the accountant side. But upon receiving your funds, you'll have an increase in your cash balance, so debit to cash, and then a credit to a liability. So your PPP funds are a loan, so they're a liability and should live on your balance sheet. As you spend that cash, you're going to debit or increase your expense accounts, and then credit or reduce your cash balance. When you are finally through the forgiveness process and you know the total amount of your forgiveness, you'll reduce your loan by that amount, and then you'll pick up other income. So this will be an income item on your P&L for that PPP loan forgiveness. Get a lot of questions about this because the loan forgiveness is not taxable. That income will show up on your P&L, but it will be non-taxable income. So don't be too concerned about that. Yeah, that's kind of our updates, Dan. Do you want to start calling out some questions?
Yeah, I think let's just work our way down from the top. So I'll read off the questions, or Tim, if you want to jump into, and Kyle, if you want to give answers, and I'll chip in too. So Chris asked, if the covered period ends prior to December 31st, do you still have until December 31st to bring FTEs to prior levels for Safe Harbor? Kyle, what's your understanding of the answer to that?
Yeah, good question. So, if you're electing for that shorter 8-week period, your covered period may end earlier. And my understanding is you'd be looking at that June 30 initial date for the restoration. If for some reason you were opting out of the 24-week period.
But otherwise, if you go a 24-week period, you can also default to December 31st to bring back FT.
Yep, exactly. So under the updates with the 24-week period, the safe harbor date for that FTE restoration is 12/31.
Great. I can take the next one here for you guys. So paraphrasing Tony's question here, basically, if you need more than the 8-week covered period to use the funds, but you don't need 24 weeks fully to use it, what period would you be required to verify FTE for related to forgiveness?
Yeah, for that, if you're looking to use the funds outside of the 8-week period, you would be using that 24-week period. So you'd qualify for all the dates that go along with that.
Okay, and so in that case, you'd retain all your records for that 24-week period, and including your payroll levels.
Yeah. So you choose either 8 weeks or 24, and if it happens to be that you use up the funds before 24, fine. But you're still opting for the 24-week period.
Okay, and then The next one here from Chris, I think is a one that I've been getting a lot of questions on. How does an EIDL loan play into this for a business? Either if they receive the EIDL loan before their PPP loan, or if they get an EIDL loan afterwards, how can that play together? Just as a side note, that the EIDL loan application was reactivated earlier this week, just so everyone's aware.
Yeah, so if you got the 10th or up to $10,000 grant, then you have to reduce your PPP forgiveness amount by the amount of the grant that you received. So you do get a reduction in how much of the loan you could have forgiven by the amount of the grant itself. The rest of the loan has to be used for purposes other than PPP. So the PPP has specific qualifying expenses. And so if you got both loans, you can't use the EIDL for the same purpose as the PPP. Kyle, anything you want to add to that?
No, I think you nailed it there.
Tim, if you have anything you want to chip in on that, feel free.
That's great.
I'll read off the next one. So Peter asks, do you have to have the same employees when calculating FTE headcount?
Good question. You need to have the same employees for the salary reduction calculation. For the FTE calculation, employees are somewhat interchangeable there because you're just looking at a count of hours.
Yeah, so there's multiple ways that the forgiveness amount could be reduced. One is salary reduction more than 25%. And with the carve out being that if they make more than 100 grand, the reduction down to 100 grand wouldn't be a reduction to your forgiveness amount. But if you have an employee who you did not hire back because it was your choice, not because they declined, then they would have 100% reduction in their salary, and you'd have to apply that reduction against the amount that you can have forgiven. That's separate from FTE. So you could have your FTE back to the same amount or greater, so you wouldn't have a reduction. But because you didn't hire back some previous employees, you'd still have to reduce it by their salary, unless they were terminated, resigned, or opted to not come back. Alistair asks, what does the FTE headcount exceptions look like? What restrictions let you qualify? Can you talk more about that? Kyle, do you want to jump on that one?
Yeah. I think you kind of just went over these, Dan. But basically, the exceptions are if you've offered to bring somebody back and they've denied your offer. If you let them go for cause, so pretty standard for cause rules there around firing an employee. If that individual asked for a reduction in hours, those are all the exceptions there that are going to qualify. The last one is just that safe harbor. So if you've restored your full-time equivalent count by 12/31/20, you'll get that kind of full exception.
Cool. Tony asks, for the $100,000 salary guidelines, the forgiveness application indicates you must identify any employee that was paid more than 100 grand during any period during 2019. What if any employee made more than $1,923 in a week? In other words, the amount that times 52 would be greater than 100,000. My understanding is that we're looking at basically in totality for the year, did their salary exceed 100,000? So that could be at any point during the year, but also in total. So if they had one period where their annualized amount would exceed 100 grand, I don't think you'd have to reduce their salary as long as in total they were under 100. Kyle, do you have any wrinkle to that?
No, I agree. I think you're looking at kind of your W-2 totals for 2019.
Tim, what was that? You had something you want to add to that?
No, just moving on to the next one. Lincoln asks, can I hire myself as an employee at his company? He's asking if he could collect around $7,600 a month over the 24-week period, or perhaps like to ask the question another way, like could he, get more by doing that versus maybe just using the 2019 net income calculations? Perhaps that might apply for him currently.
Yeah, I think Lincoln, I'd wonder how you're set up. So are you independent contractor, sole proprietorship, partnership, or S Corp? I'm going to assume not an S Corp because otherwise you'd already be on salary. So depending on the answer to some degree, that would dictate things. But if you were to add yourself to salary, that would be helpful if FTE was an issue. So if you were potentially under the total FTE amount, then that could be helpful in terms of restoring you to the previous level. But you may still be subject to salary reduction because we're looking at what were employees that you had last year who were not hired back. So may help for FTE, but you may still be subject to the salary reduction piece. Kyle, let me know if you want to add anything onto that.
No, I would agree. I think it comes down to a entity type on that one. It's really going to drive the answer to that question.
Yeah. So Lincoln, if you want to drop in what entity type you have, we can circle back on that and give you a more specific answer. We had an anonymous question. The owner compensation, does this apply if the owners are regular salaried employees or only if compensation is via non-regular payroll?
That's a good question. Right now, the assumption is that it applies to both. They did not come straight out in the updates and say that this applies to S corporation owner employees, but based on the terms that they used in their explanations, it seemed to apply to owner employees, which generally are those S corporation owners. So yeah, we would think non-regular payroll being sole proprietorships, partnerships, and then also owners of S corporations.
Yep. If you use the funds past the initial 8 weeks, do you have to wait until the 24th week to apply for forgiveness?
Yeah. So one of the requirements is that you do not apply for forgiveness until your covered period has ended. And so if you're using funds outside of that 8-week period, you're sort of electing the 24-week period by default. So you do need to wait until that 24 weeks is over.
And our recommendation, so if you've already eclipsed the 8 weeks right now, or you're close to eclipsing the 8 weeks, our recommendation is still to hold off on applying for forgiveness anyways, because of the magnitude of questions that are still unanswered. That said, it's nice to have certainty about what the SBA's ultimate approval is on your forgiveness. But if you've kept a separate bank account, you've documented all of this, you've calculated what your forgiveness is, then hopefully you can just sort of continue on with business as usual. And then unfortunately, it's just going to be on your task list once you get to that 24-week period where you have to apply at that point. Let's see. Becca asks, if I spent money out of my PPP checking account that was uncovered, but I didn't realize it at the time, such as owner health insurance, can I transfer money into my PPP account for my regular business checking and then use the money for a forgivable item instead and report the forgivable item on my PPP spending spreadsheet for record keeping? Yeah, I think the best practice is if you used it for non-qualified expenses that you reimburse for that. Kyle, anything you want to add?
No, I would agree. Yeah, it seems just replace the funds and have support of the transfer to document it.
During the process of changing the rules, it was discussed that you do not need to make payments as long as your forgiveness application is under review submitted. Was that rule approved?
I think that's still an unanswered question, but do you guys have a quick answer on that?
Yeah, I don't know the answer to that one yet. I think it's still open-ended. Sissy says, I received my PPP in April. I think we were past our 8 weeks and did not request an extension, rather assumed it applied. I think by default it applies, right, Kyle?
Yeah.
Will forgiveness be determined based off what we spend? If we are partially open and are able to support our costs via cash receipts and do not touch the PPP monies received, will that pose an issue? So you are, I need a little bit more context, I guess, to give you the right answer, but so you're open and you're paying out wages. I guess, why would you not use the PPP funds to pay out those wages to have it be forgiven? So if you give me a little bit of clarity on the question, we might be able to give you a better answer. But if you don't touch the funds, you don't use them, then presumably you wouldn't be applying for forgiveness, in which case you'd either have to pay back those funds potentially immediately, and or it's going to convert to a loan.
Hey, Dan and Kyle, that kind of prompts a question that I had around expenses that have been paid for versus accrued during the covered periods. Could you speak to that a little bit?
Yeah, good question. My understanding is that it's paid, what you actually pay out. So somewhat irrespective of, in most instances, irrespective of when it was incurred. So things like payroll may have been incurred before the covered period, but if it's paid during it, that would be what counts. So it's basically cash basis, what comes out of your account during that period, not what is incurred during that period or accrued. Kyle, if you have anything to add to that.
No, I agree with that. The only other note is on non-payroll. I think we talked about this a bit in the presentation, but on non-payroll expenses, you can capture both accrued and paid during the period.
Lisa asked, does dental insurance or Affleck benefits count as group coverage? Do you know, Kyle? I know that the term says health insurance.
Yeah, I believe that they did come out and clarify that dental is covered. I'm not sure on the Affleck.
Yeah, my assumption, and this is an assumption, would be that dental would be covered, but Affleck, because it's supplemental, would not be. Also, a lot of plans have dental baked into the premiums as well. So health insurance premium. So I think you're right on the dental, but I would assume no on the Affleck. Kyle, I'll let you answer this one. What constitutes other rent? Would an offsite business's document storage rent qualify?
I do believe it would qualify. As far as other rent, it's pretty broad there. The real restriction there is that you must have a rental agreement that was in place prior to 2/15/20, I believe is the date.
Yeah, everything I've read about rent is that it's all going to look back to rent and utilities to, was it in service effective February 15th or before? Anything that was put in place after that, rent, utilities, etc., would not be includable in the forgiveness calculation. Roberta asks, what if an employee is paid an exceptional payment during the 8-week period, like a commission, but has a base salary below 100K? How do we count that month's payment, even if that annualized payment would bring the figure above 100,000? Yeah, good question. And I think that the answer is, from what I've seen thus far, and Kyle, of course, let me know if you differ, is that they're going to be capped at 24 divided by 52 times 100,000. So whatever that number is the cap per employee. So as long as the total amount that they were paid is less than that number, which is I think around 42,000, it would all be includable. But to the extent to which it goes over that threshold, you'd have to exclude that portion that goes above.
Yeah, I think you're right on that, Dan.
Yeah, initially I thought that we were going to have to take every payroll period. I mean, this is weeks ago. I thought we were going to have to take every payroll period and look and annualize their salary. And then if on an annualized basis, it was going to exceed 100 grand, we'd have to limit that specific payroll period. But in all the workbooks that came out from the American Institute of CPAs and all the payroll providers like Paychex and ADP and Gusto, I haven't seen anybody treat it in that fashion. So thus far, the conventional wisdom that I've seen from all of the service providers is that we're just going to use the 24 divided by 52 times 100 grand as the cap, and not have to annualize each payroll period. Dee Dee wonders, if we're ready sometime this fall, can we apply for forgiveness before the end of December? Will it be reviewed at that time, or will the lender wait to begin any reviews until after December 31st?
I can take this one if you want.
Yeah.
Yeah, so a business can apply as soon as their covered period ends and they have the supporting documentation for that period. Lender is supposed to get that process within 60 days. I don't think it would take that long in most cases. So if you have a clear-cut deal where you're almost certain that you're going to have full forgiveness, then you could proceed as soon as your covered period ends. But if you're uncertain, or if there's some gray areas, then getting back to Dan and Kyle's recommendation to wait longer might be a good idea.
Cool. Alistair asks, for salary reduction, does that include reductions in salary for people who earn over 100K a year? And the answer is no. That's just to the extent to which they're reduced by more than 25%, and that reduces them to below 100 grand. Willem asks, how do freelancers who apply to PPP as independent contractors go about applying for forgiveness? This might be a Tim question. If the loan funds went into one's personal bank account, how does one delineate what qualifies as payroll costs? Kyle, do you want to take part of that in terms of what an independent contractor is allowed to use for forgiveness?
Yeah, thanks, Dan. So independent contractors, they have sort of the easiest calculation here, in that all their numbers are going to be based off 2019 activity. So you're going to do, in this case, 2.5 out of 12 times your 2019 net profit, and that's going to get you to your forgiveness calculation. It's the same calculation that you used to determine your qualified loan amount in the first place. So sort of a backwards way of saying you should qualify for 100% forgiveness. Tim, you might have the answer on this. There's a streamlined or an easy application form that's been put out that's specifically for independent contractors and kind of small businesses.
Correct. And on that last part of Willem's question there, in the case of an independent contractor, is it correct? I mean, they wouldn't really need to worry about, the other expenses beyond their own payroll or income, just based on how it's qualified up front. Is that correct?
Yeah, that's correct. They don't really have payroll costs per se. You're just looking at 2019 net profit for the calculation.
So as far as their documentation, what could they expect to be wanting to collect,
Yeah, our understanding is for these, at least, you're really looking at 2019 tax returns as your substantiation for that calculation.
Angie asks, if taxpayer uses the funds to give bonuses, try to use funds for payroll under 8 weeks and has now almost used the funds, can he use the 8-week period and apply for forgiveness? And then after that, reduce his workforce because operations are still not 100%. I know for owners, at least, there's a look back to what their salary was in the previous year. In terms of if you were to bonus them so that they get to more than their prior annualized salary and include that in the forgiveness. Kyle, do you know how that shaked out in the most recent guidance?
Yeah, I think if you elect the 8 weeks and you pay out those bonuses, the only issue you're looking at is the potential to exceed that $100,000 cap. Otherwise, for the FTE calculation and the salary reduction calculations, you're looking at that shorter window, that 8-week window. So it should be okay. But I just want to, say as we did before, I would urge you not to apply for forgiveness yet, while all the final guidance is still kind of up in the air.
Next question, if we opt for the 24-week period, we could use all of the funds towards payroll, correct? Yes, you can. Payroll has to be at least 60%, but it could be 100%. How is an FTE at 12/31/20 defined? The definition of FTE is based off 40 hours per week. And so you look at the hours, total hours worked during the period divided by 40 to arrive at your FTE number. But as of the date of 12/31, that higher date, I think would be the similar calculation. In this case, you're looking at what are the average hours for each of your employees, and what is that divided by 40? How does that calculate out to the number of full-time equivalents? So it's not just number of people, it's full-time equivalents. So we have to look at how many part-time people we have and what are their expected hours to determine the full-time equivalent number. Are HSA contributions made as part of our insurance program covered expenses as payroll costs? I believe the answer is no.
I agree.
So generally speaking, is it consensus that everyone should opt for the 24-month forgiveness period? I think unless you have absolute certainty that during the 8-week period you've fully covered the forgiveness, then the most conservative thing to do, especially given how many unknowns there are, would be to default to the 24-month.
24-week, right?
24-week, but yeah, I would agree.
All right. It says month and I was reading it off, so my mistake. 24-week. Yeah. So the downside to waiting 24 weeks is that you have to wait. So you're kicking the can to later. The upside is that you're increasing the probability that you're going to have it completely forgiven. So I think that the upside relative to downside would suggest that generally speaking, you should default to 24 weeks. Kurt asks, so we can show an inability to conduct business at pre-COVID levels due to valid COVID-related inability to perform, i.e. government proclamations, travel restrictions, etc. Can that reduce the FTE threshold as well as salary? I think that speaks to some of those exceptions that we talked about earlier. Can you tackle that in a little bit of detail?
Yeah, so they did come out in those recent updates and say that there's going to be exceptions for COVID-related inability to return to full operations. So if lockdowns have prevented you from bringing people back in or opening your doors, we're still waiting for final clarity on what those exceptions are going to look like. But yes, there is exceptions there.
Chris asks, what would be considered unauthorized use of funds, and how is this different than if we don't use the full amount of the loan on payroll, rent, etc.? So Chris, we'll get you the slides, but there is a list of of authorized use of funds for PPP. And effectively, if you use the funds for anything that's not on that list, then that would be unauthorized and potentially basically due ASAP. Whereas if you just have an unused remaining balance, that would convert to a loan. Jennifer says that she was on a call this AM and the SBA rep said that our loan forgiveness would be minus the EIDL grant amount. Yep, that's accurate. Kurt says that they heard that the SBA will give less attention to calculating forgiveness on smaller loans, or specifically that any loans under 150 will be automatically forgiven. That sounds like a pretty cool rumor. I wouldn't assume that's true. Hey guys, sole proprietor here. How do I prove my employment wages for forgiveness? Do I need something administrative like move money out of my business? So sole proprietor, Kyle, you might have, I think you covered this a little bit earlier, but the sole proprietor independent contractor, basically you can do you do a look back to last year.
Yeah, exactly.
So not really much you have to do in terms of documenting. In fact, sort of the most straight line out of all these scenarios, because you're just going based off your 2019 return. Edward says, I'm giving my employee a $600 bonus per pay period to help offset what they lost from unemployment. Does that count in forgiveness? It would be considered wages, and we'd have to go through that calculation to look at all of your employees and who had a reduction in wages of more than 25%. And then we'd have to look at your FTE to determine kind of your overall forgiveness. So unfortunately, not necessarily a straight answer to that. This whole forgiveness thing is pretty mechanical, and you got to kind of work through each of the steps. You know, how many employees were reduced by more than 25%? What was that total dollar amount? Did I restore my FTE to its appropriate levels? What is the ratio of wages to other expenses, other qualified forgivable expenses? That's got to be at least 60%. So you got to work through each of those levels, unfortunately, in totality. And so it's a fairly mechanical exercise. McDrywall asks, do we need to let someone know whether we are choosing the 8-week or 24-week period? Tim, this is maybe in your wheelhouse. My understanding is that you don't have to notify. If you want to use the 8-week, then you would apply for forgiveness after 8 weeks. Otherwise, there's no formal notification.
Yeah, you know, I believe that would be indicated on the forgiveness application, but I'd need to double check that. You don't need to notify anyone before you get to that stage.
Carlos asks, if the funds are used by June 30th, how do I apply for the forgiveness? I think we gave some slides in terms of the step-by-step, but there's a kind of application right that you should be able to get from your bank. So if you're an Umpqua Bank client, I'd reach out to them. If you're not an Umpqua Bank client, I guess, why not? Now's the time to change. Plug for Tim.
Yeah, thanks. I could also just say, you know, our application is scheduled to go live on July 6th. It'll be all electronic, but the SBA forgiveness application is out there in case anyone wants to kind of start looking it over, although there could be some modifications to it happening here.
Cool. Well, I see the questions continue to roll in. And we're past 1 o'clock. So Kyle, I don't know how much more time you have, but we can take a few more questions. A couple things to note. So you can go to this URL right here, wealthqna.com/free tools, and sign up. And that's where you can get any additional alerts about upcoming things, as well as so anything that is any updates to PPP related stuff, we'll send those out to anyone who signs up there if you're not already on our list, Nth Degree CPA's list. So check that out. Otherwise, also when we send out the The slides and replay tomorrow will also make available a way for you to submit your questions that were not answered. Please do not email me directly with your questions. I'll give you another way so that I can better distribute them to the team. I know many of you reached out, and right now my inbox is pretty flooded with questions. So I'll give you another mechanism to submit questions so that I can get some assistance from my team. Otherwise, just from the sheer volume of it, you might not hear back from me for a little bit. So hold off and submit those questions once I can give you a better framework to do that. With that, I guess a couple more questions. Emma asks if we have no chance of bringing back the levels of employees by the end of the year because they're in travel. Is our forgiveness prorated, or is there no forgiveness? So again, you may have, because I know this question came in about 30 minutes ago. We may have already kind of given you the answer, but I'll just step through it again. So we got to really go through the mechanics of it and say, we take the total amount of PPP loans that we received, and then we go, okay, how many employees had a salary reduction of more than 25%? And then the amount that was more than 25%, the total dollar amount, we're going to apply that against how much we can have forgiven. Then we're going to look at FTE. Then we're going to look at the ratio of payroll to total expenses. So we're going to kind of have to walk through each of those. And so again, it's unfortunately not a straight line. There's multiple variables to kind of get there. So some of it will be forgivable. It's just you'll unfortunately have to work through the calculation to get to the final answer. Liz asks if your covered period ends in mid-June and you basically kept salaries and FT at the pre-COVID level throughout the covered period, can you choose the 24-week option and be forgiven for more than 8 weeks worth of payroll? Yeah, you can choose to go with 24 weeks instead of 8. That would be our default recommendation at this point, to hold off until there's more guidance, and also just kind of ensure that you're going to maximize the total amount. I don't think there's any downside other than just waiting. So if you replace a team member and pay the new hire the same wages, is that still a reduction of wages for the calculation? Yes. Unless the person who you replaced was terminated with cause, resigned, or when you offered to bring them back, they declined. And you then notified the unemployment office that they declined your offer to come back. So you'll have the wage reduction, you just won't have the FTE reduction. Someone else says, seeing some stories about PPP loans under 200K being forgiven entirely. This seems like a pipe dream, but what are you hearing? I would not assume that. There's specific guidelines for this, and that sounds nice. I think that I wouldn't assume that there are. I don't know what the final tally of the number of PPP loans issued were. I know that those loans $2 million and greater are going to have a higher level of scrutiny and a higher level of evaluation with respect to did the company really need the funds? So that certification where you said, I need the funds and I couldn't access it capital otherwise, I think those are going to face a higher level of scrutiny. But I wouldn't then assume that lower loans are going to receive no scrutiny, no evaluation. The attorneys, so we've watched a wide range of continuing education things and talked to a number of different professionals. And our legal counterparts have been really ringing the bell about just fraud risk and that whole certification around whether or not you really needed the funds. So I've heard more on that side of things than the sort of side that the loans under a certain amount are just going to be automatically forgiven. All right, so we're over on time. I know there's still several more questions, so I'll get a way for you guys to submit your questions when we get the replay out as well. But I'm up against another meeting here, so apologies. Tim, anything you want to add before we wrap up?
I just want to thank you, Dan and Kyle, for giving your time, sharing your time with us to get a lot of great info out and answer a lot of questions. So thanks for doing that. And as Dan said, we'll get the slide deck out as well as the contact information for the three of us in some form. So feel free to reach out, with additional questions, or if anyone out there still is looking for help with getting a PPP loan, you could let me know as well. We are turning those around pretty quickly. So we've seen some additional, sole proprietors and independent contractors and things, but then we've also been seeing US-based foreign-owned companies applying now because they didn't think they could before. So if you're in that boat, let me know as well. But that's it on my end. Anything from you guys?
No, I appreciate it. I think I don't have much more to say other than I appreciate everyone tuning in. Hopefully this was valuable, and we'll get the slides out and go from there.
All right. Thanks
Cool.
again. Thanks,
All right.
everyone. Thanks for joining.